Hey everyone, welcome back to the Deep Dive. So much going on right now in the financial world, and I know a lot of you are probably tuning in because you're trying to make sense of uh, all the chatter about the Federal Reserve and what they're doing with interest rates, especially with all this talk about an emergency meeting they supposedly had,
Yeah, for sure.
right? And you're probably wondering, what actually went down last Monday, the 7th of April, and what it could mean for the economy moving forward.
Right.
So today we're going to really try and cut through the noise and get to the heart of the matter. We've been digging into a bunch of different sources, news articles, the Fed's own announcements, and some insights from market analysts to try and get the clearest picture possible.
Exactly.
Our main goal for this deep dive is to figure out two things, really. What actually happened on Monday the 7th? And should the Fed be thinking about lowering interest rates right now, especially with all the uncertainty around President Trump's tariffs?
Absolutely. Yeah, there's been a ton of buzz around this so-called emergency meeting. So let's address that right off the bat. If you went to the Federal Reserve's website, like we did, and checked out financial news sites, you'd see that the meeting on Monday, April 7th, was actually just a regularly scheduled closed Board of Governors meeting.
Okay.
These meetings happen pretty routinely, typically every other Monday.
Oh, interesting.
So it wasn't anything out of the ordinary.
Yeah, it's kind of surprising that some professional news sites were even pushing this whole emergency meeting narrative.
Right.
It was really just business as usual.
Wow, yeah, that's interesting. Okay, so it seems like this whole idea of a sudden urgent meeting was blown way out of proportion.
Yeah, pretty much.
That leads us to the big question that I'm sure is on everyone's mind.
Uh,
Should the Federal Reserve be cutting interest rates at this point in time?
right.
And from what we've been reading, there are some pretty solid arguments on both sides.
Yeah, definitely. So let's start with the case for potential rate cuts. The main driving force behind this is all the anxiety surrounding President Trump's tariffs.
Well, investors are really starting to factor in the possibility of more rate cuts this year. You could say they're pricing in those cuts because of growing concerns that the tariffs could lead to a recession.
I see. So the markets are already reacting to this uncertainty.
Exactly. And we're seeing some pretty clear signs of that CME's FedWatch tool, which basically tracks market expectations for Fed policy, showed a pretty big jump in bets on more aggressive rate cuts this year. And that's a direct response to the worries about how those tariffs are going to impact the economy.
That makes a lot of sense.
Then you have economists at JP Morgan. They've actually made a pretty significant downward revision to their GDP forecast for the year.
Oh, wow.
Yeah, they went from predicting growth of 1.3% to now anticipating a 0.3% contraction.
So they completely flipped their outlook.
Yeah, pretty much. And they're pointing to the tariffs as the main culprit for this change.
So this isn't just some minor adjustment. They're talking about a potential shrinking of the economy.
Exactly.
Yep.
This kind of move from a major financial institution like JP Morgan really signals how concerned they are.
Right? It's like a warning sign.
Yeah, you could definitely see it that way.
This whole thing really highlights the potential for these tariffs to create some serious economic headwinds.
For sure.
And this isn't just a U.S. problem either, right?
Nope, it's not. Other central banks are taking notice and making moves because of these trade policies, too.
Really?
Yeah.
What have we seen happening?
Well, both the Reserve Bank of New Zealand and the Reserve Bank of India recently cut their interest rates. And what's interesting is that they both specifically mentioned concerns about U.S. trade policies and how they could impact global economic growth as major reasons for their decisions.
So this is definitely a global concern then.
Oh, yeah. There's definitely a sense of unease internationally about how these tariffs might affect the world economy.
It makes sense that some people would think the Fed should lower rates to soften the blow if the economy starts to slow down because of all of this.
Right.
But as with pretty much everything, there's another side to this coin.
Yeah, for sure.
Some people think the Fed should be super cautious about making any sudden moves with interest rates.
Right.
Like maybe they should just hold off for now.
Exactly. Well, Greg McBride from Bankrate had a really interesting take on this.
Okay.
He said that an emergency rate cut right now could actually backfire and end up causing more panic instead of calming things down.
Oh, wow. So it could have the opposite of the intended effect.
Yeah, because a sudden unexpected move by the Fed could make the markets think that they're seeing some huge problem that they've been keeping under wraps,
I see.
which could make everything even worse.
That makes a lot of sense. Sometimes a big dramatic move can be perceived as a sign that things are really bad.
Exactly.
So what has Fed Chair Jerome Powell said about all of this?
Well, he's indicated that the Fed is in no rush to make any changes to its monetary policy, which makes sense. He's in a tough spot trying to balance the possibility of inflation, which the tariffs could definitely make worse.
Right, because imports will be more expensive.
Exactly. And he's also got to consider the job market, which needs support.
Yeah. Of course.
And to add to that, San Francisco Fed President Mary Daly has also cautioned against overreacting to all the economic uncertainties surrounding trade and fiscal policy.
Right.
She believes the Fed is in a good position to hold steady for now.
So the Fed is in kind of a bind here.
Totally.
The tariffs could lead to higher prices, which
Mhm.
would normally mean you wouldn't cut rates.
Right.
But they could also slow down the economy, which would usually suggest you should lower rates.
Yeah, it's a classic dilemma. Former Fed Governor Lawrence Meyer actually called this a no-win situation.
Wow, that's a pretty strong statement.
It is, but it's true. The tariffs create this conflicting pressure that makes the Fed's decision so much harder.
Right, if they cut rates to try and avoid a recession, they risk making inflation worse because of those more expensive imports.
Exactly.
But if they don't cut rates and the economy does take a hit, they could be blamed for making things worse.
For sure.
It's a real balancing act.
Absolutely. And it seems like some analysts are saying that maybe the Fed should think outside the box a little bit.
Oh, interesting. You mean like not just focusing on traditional interest rate cuts?
Exactly. There's some other things they could try.
Like what?
Well, one idea is to exclude Treasury holdings from something called the supplementary leverage ratio.
I'm not familiar with that.
It's basically a capital buffer requirement for banks.
Okay.
And by excluding Treasury holdings from that requirement, it would free up their balance sheets and give them more flexibility to deal with market volatility.
I see.
Another suggestion is kind of similar to what the Bank of England did in 2022.
Okay.
They temporarily bought longer-dated government debt to stabilize the bond market.
So kind of stepping in to provide some support.
Yeah, exactly. Though it's worth noting that they later resumed hiking rates to deal with inflation.
Right, so it wasn't a permanent solution.
Nope.
What about those more targeted interventions we mentioned earlier?
Right. So the Fed could also consider using targeted lending facilities, kind of like what they did during that whole Silicon Valley Bank situation.
Oh.
These are more specific measures aimed at addressing stress in certain parts of the financial system.
So it's a more focused approach.
Yeah, exactly. They could also tweak things in the overnight borrowing market, specifically related to something called SOFR, the Secured Overnight Financing Rate, which is basically a key benchmark for short-term borrowing costs.
Oh, yeah.
So adjustments there can influence overall market liquidity.
I see.
And these kinds of moves can help with liquidity problems without resorting to a broad interest rate cut.
Right, so they're kind of fine-tuning things behind the scenes.
Exactly.
Let's circle back to inflation for a second. We talked about how tariffs could push prices higher.
Right.
Can you break down just how big these tariffs are and what kind of impact they could have?
Sure. So the tariffs being implemented are actually pretty substantial. We're talking about a 104% tariff on some Chinese imports, for example.
Wow, that's huge.
Yeah, it is. And these kinds of increases are almost guaranteed to lead to higher prices for a lot of imported goods and materials.
So consumers are going to feel this.
Yeah, pretty much domestic manufacturers who use imported parts will see their costs go up.
Right.
And that's going to trickle down to consumers in the form of higher prices on all sorts of stuff.
It seems like this potential for inflation caused by the tariffs is a major factor that the Fed has to grapple with.
Oh, absolutely. It really complicates their decision-making.
It sounds like President Trump is determined to stick to his guns on these tariffs.
Yeah, that seems to be the case. From what we've read, he's not backing down at all. And he's basically saying that Americans need to be ready for some economic pain to reach his trade goals.
Wow.
Yeah, he even posted on his Truth Social platform, urging people to stay strong and be patient.
So it seems like these tariffs are going to be a major factor in the economy for a while.
Yeah, most likely.
And it's not just the U.S. that's worried about this whole situation, right?
Nope, not at all. There are some real concerns about global financial instability brewing.
What have you heard?
Well, the Bank of England actually issued a warning about the potential for rising tariffs to destabilize the global financial system.
Oh, wow.
And they're saying it could lead to some pretty big drops in asset prices.
This is a much bigger issue than just the U.S. economy.
Exactly. It's a global concern.
So to recap, it looks like that Fed meeting on Monday was just a regular scheduled thing, not some big emergency session.
Right.
And the bottom line is that the Federal Reserve is in a very tricky situation.
Totally.
They're dealing with all these conflicting pressures because of the tariffs.
Uh-huh.
On the one hand, they could slow down the economy.
Right.
But on the other hand, they could push inflation higher.
Exactly.
It's like a lose-lose.
Yeah, pretty much. The debate over cutting rates isn't simple, There are good arguments on both sides?
Yeah, you could cut rates to try and prevent a recession,
Right.
but you could also hold steady or even consider some of those other measures we talked about to keep inflation under control.
It's a tough call for sure.
So, with all that in mind, what do you think the Fed should do? And what should we be watching closely to see how their decisions play out?
That's the million-dollar question, isn't it? Hopefully this deep dive has given you a better understanding of all the complexities involved.
Yeah, absolutely. If you found this analysis helpful, we encourage you to keep digging into these issues and stay informed.
For sure.
And to make sure you don't miss any of our future deep dives on important economic and financial topics, please subscribe to our channel and hit that bell icon.
Yeah, we'd really appreciate your support.
Thanks for joining us on this deep dive into the world of the Fed and interest rates. We'll see you next time.
See you later.